Today is Monday, 3rd of August, and coming into this new month and this weekly open today. After last week and the monthly close, there was some relief, which was nice to see, and in particular, the S&P and the Dow Jones have pretty much retraced all of the move that happened on the Wednesday, and including, more importantly for the S&P, it completely retraced the move and closed above all of its lower time frame moving averages. So for the most part, the S&P and Dow Jones aren't showing any signs of trend deterioration or breakdown just yet. There was definitely a bit of cause for concern on the Wednesday, and I remember saying that what I wanted to see was this move be retraced. I expected some sort of relief after that move, but what I was waiting to see was how much relief we'd actually see. And this is exactly what I wanted to see. I wanted to see a complete retracement of it. And even though this trend line here was broken a little bit to the downside, this low remained intact and wasn't tested. And for the most part, things are still clearly or the market's still clearly in a range-bound environment. So the Nasdaq, that also saw some relief and also completely retraced its move on Wednesday. And all of this coincided with the fact that the Situational Awareness Fund actually blew up. At first, it was just signs that they were deleveraging, but actually it came out that they had to completely liquidate their entire portfolio, and they were completely bought out by Citadel. So to me, that initially says that selling pressure has been digested by the market, absorbed by the market, and coming into this new month is about just seeing how the market actually wants to respond to this event. There's been a clear deleveraging or leverage unwind, and for the Nasdaq, there was clear structural weakness and clear shift in market structure. All lower time frame moving averages are trending down and lower, but the 10-day was closed above slightly on the Friday close. So what I'm looking for this week is how price reacts around where it currently is at this level. So ideally, for me to be more optimistic and more bullish, I'd like to see multiple daily closes above this 10-day moving average, and I'd like to see it flatten out and then actually start resume its upward trajectory again, and eventually reclaim the 20-day, and that would make me feel more inclined to put risk back on in the market. But as of now, it's just about gathering more information and waiting to see how the market actually responds, because this was clearly an oversold relief bounce, and it coincided with a fund, the massive fund, not a massive fund, but a fund that was clearly over leveraged in the AI space and blew up. And the fact that the Kospi, a lot of people, I think it was around 3.4% of Korean accounts were liquidated, or the Korean adult population were liquidated, something along those lines. There's definitely been a lot of damage to the market participants. So beneath the surface, on a relief like this, I would have expected to see, or wanted to see, some underlying strength across breadth indicators, and that definitely didn't come. So whilst this was happening from the Wednesday where the sell-off happened, the number of stocks above, the percentage of stocks above their 20-day moving average was actually declining after that. The number of stocks making new monthly highs was also declining, and the number of stocks making 52-week highs was also declining throughout that period. The number of stocks making new lows stayed relatively flat, but the fact that the number of stocks making new highs actually deteriorated throughout that move, it just reinforces the fact that we are in a trend deterioration kind of state, and at best we're range bound, we're chopping, because stocks aren't making new highs. They're actually the number of stocks making new highs is actually reducing and becoming less over time. So in my opinion, I think that the market will continue to deteriorate, and based on the previous FOMC comments from new Fed Chair Walsh, he's basically saying let the market decide in terms of what it wants to do. Their Fed rates are staying or remain unchanged, but the 30-year US 30-year bond yields have broken out, and they've broken out above these highs here from made in October 2023, but also they're at highs and at levels not seen since 2007. So the fact that that's happening is definitely a cause for concern in terms of equity. The fact that there's so much uncertainty in regards to Iran, US, the Japan and US are both supporting the yen by selling euros and dollars respectively. So the fact that that's happening whilst yields are spiking, there's so much uncertainty within the market. It begs for the question: why would people continue to put risk on here when the risk-free yield is rising and potentially breaking out? And say if it did go to something like 6% or higher, why would market participants want to put risk on in the market when there's just so much uncertainty and a clear breakdown in market structure in regards to tech, which typically drives the market? So just having a quick look at oil, which is just a key talking point as of right now. It did come into this weekly open and this monthly open, currently down 7%, gap down based on the Trump comments of potential de-escalation with Iran, US, and the Strait of Hormuz opening. But it's just a yo-yo at this point. It's just back and forth, and until there's real concrete evidence that that's the case, I'm not reading too much into it. But ultimately, if these lows here do get closed below, I would be a lot more optimistic. I'd like to think I'd be a lot more optimistic, depending on what else is happening in the market, and be convinced that this actually was just a relief or dead cat bounce type thing, even though it's more based on what is happening between Iran and US. It does, for now, for the most part, look structurally sound. It looks like a dead cat bounce or relief rally, and then price would continue to fall back to its lows, kind of around the 70 mark. So this is definitely something that's it got me feeling more optimistic compared to the other things that I'm seeing. So based on everything that I'm kind of seeing in the market right now across breadth and just overall market structure and on the major indices, I'm coming into this week and monthly open with a neutral bias. I'm not expecting too much in terms of either direction. I just want to gather information and see how the market responds after this kind of the last 2 to 3 days of price action. So coming into today, I'm neutral.